Hello, it's Chris Hynes from Wealthi. I hope you're doing well. Today I just wanted to run through a quick breakdown talking about the Melbourne market. Now, I guess in the end of last year and really the build up to 2022, there was a lot of activity happening in that Melbourne market in preparation, you could say, for the reopening of borders, and it, you could say, had a slightly less intense and aggressive growth pattern when you compare it to the other capital cities across Australia as well. As you can see in the chart behind me, if you compare it to Sydney and Brisbane, Adelaide and Perth, over the past 12 months, year to date to January 2022, you can see it really sits at the bottom of those five combined capital cities in terms of growth over the past 12 months. Now, a lot of that comes down to the restrictions that we saw that were put in place on Melbourne through 2021. Of course, also the harsher the tightening of border restrictions as well. But now leading into 2022, I think there's a lot to look forward to in that Melbourne market. I think we're going to see some stronger growth in comparison to other regions in Australia, really comparing it to your Sydney more so. I think it's going to really benefit this year off the back of these easing of border restrictions. And as we continue to see interest come back for Melbourne as well. I guess a lot of the stories last year were talking about the interstate migration out of Victoria, out of Melbourne more so, and up to places like your Gold Coast and your Sunshine Coast, your Brisbane's, and then the more regional locations in Victoria, South Australia, and regional New South Wales as well. But I think we're going to begin to see that transition back into Melbourne, and we'll run through a couple of points today that will give you a good idea as to how things are tracking, what's expected this year in terms of growth. We'll briefly run through some of the auction clearance rate numbers as well. There's a Westpac report where they've partnered with CoreLogic, and we'll run through some of the figures in that report as well, and there's a little bit about how the population is tracking and how it's set to surpass Sydney as well in the next few years. So we'll run through those things today. If you've got any questions come the end of this video, please feel free to reach out to myself or the team. We're all more than happy to have a chat, and we look forward to hearing from you soon. So to start off with, we'll just quickly run over this chart that you can see behind me. Now, as I mentioned, year on year, Melbourne sat, in terms of combined capitals, Melbourne sat at the bottom end of growth in comparison to its Sydney, Brisbane, Adelaide and Perth. Now, that, you could say, was to be expected last year. As I mentioned briefly in the introduction, we saw that migration shift out of Melbourne's. They had really harsh lockdown restrictions. It was hard for people to get into the country as well. And Melbourne relies quite heavily on its overseas migration into the city. We'll run through some of the figures shortly, but that is a big component of Melbourne's growth and how its numbers accumulate year on year in terms of growing that city's population. So that had a massive impact, and that was to be expected. We started to see those people that were living in Melbourne that couldn't bear months and months of restrictions, moving to places like Brisbane, your Adelaide's, Sydney as well. And as you can see, the growth on year really is reflected in those markets, given that we saw that interstate migration. Now, looking at the change month on month, it's experienced a 0.2% rise in property values over the past month. I was expecting that to be a little bit stronger, but nonetheless, it's moving in a positive direction. I think as a whole this year, growth isn't going to be like it was last year. I think these numbers are going to be more conservative as a whole. So I think 0.23% for the month is still a good month all in all. And of course, we've got the worry in the back of everyone's minds at the moment around interest rate rises. So that's something that I'm sure is playing on a lot of people's mind, which is maybe why we aren't seeing as much growth as we saw last year in the opening months of this year. But nonetheless, it's tracking in a positive direction. Now, I briefly mentioned the arrival of overseas migration again, and this was a piece put together by CoreLogic talking about the net overseas migration into Australia and how many people really do move from overseas into Australia, and more so Melbourne. So according to this data here, historical ABS data shows around 45% of overseas migrants will settle in the 10 SA4 regions each year, which are located across Melbourne and Sydney. Now, looking at these S4 regions, so this is the list of them here, you can see that Melbourne really dominates the top of the order. A lot more migrants move to Melbourne There's a lot more employment opportunities for a lot of these skilled migrants that are coming into the country. I guess another massive bonus for Melbourne is the fact that you could say it's the cultural hub of Australia as well. And for people moving from Europe, for example, where they still want that sense of community and culture within their community, they choose Melbourne as a destination to reside in. Now, of course, it's also a beautiful place to be living. It's one of the largest cities in Australia. It's a very happening place, and you've got a very diverse mix of skills and people that live in this city as well. So that's a big driver for migration. And as you can see, in Melbourne, you're looking at close to 20,000 overseas migrants that move into the country each year. Looking at South East, about 15,500 as well. And then West Melbourne, you're looking at about 12,800 overseas migrants moving into the country. Of course, then it dips down a little bit more for these inner west and northeast pockets, but still some very strong numbers as a whole, and significantly more than Sydney. Now, when a lot of these migrants move over to Australia, they're generally renters, and they're coming into that rental market. They're going to be in shared accommodation potentially as well, or private renting. So that rental market is a big component for, you could say, your investment's growth. And it relies, or the Melbourne market more so, relies quite heavily on these migrants moving over and occupying a lot of these rental properties that are on the market. So last year, you could say there was a bit of a dip in terms of rental demand for a lot of these properties in Melbourne. You had a lot of people trying to take advantage of these record low interest rates. They were buying properties and benefiting from some solid growth of about 14% for the 12 months to January 2022. So that rental market, you could say, was hit slightly more so in regions like the inner region of Melbourne, where we saw a 5.7% dip. The western Melbourne saw a rise of 0.4%. Inner east of Melbourne saw a 0.9% rise, and then the northeast 2.3%, and the southeast 3.8%. Now, on the back of talking about population growth and migration into the country, I just wanted to mention Melbourne's population very quickly. Now, this is something that we commonly talk about and something that we're very bullish on in a sense. And we try and draw comparisons from places like Sydney or areas in Sydney where we can compare it with places in Melbourne that offer a very similar lifestyle, you could say lifestyle offering. You've got similar accessibility to your retail and your amenity, to schools, to education, to universities, and we try and draw that comparison. Now, if you were to compare an area in Melbourne with somewhere that was similar in Sydney, that property in Sydney is going to be worth substantially more than what it is in Melbourne. Now, a big reason for that is the fact that Sydney has a greater population, there's greater demand for these properties, people want to be closer to the city, so that inner pocket of Sydney is quite you could say a prestigious place. It's a very expensive place to be living as well, and Melbourne hasn't seen that ripple out yet. They have seen it in some regard, but they haven't seen it to the same extent that Sydney have seen it. Now, judging by a lot of reports that are out there at the moment and articles and all sorts of things talking about the population of Melbourne, Melbourne's population is set to surpass Sydney's by 2027. Obviously, we did have COVID, which put a little bit of a spanner in the works, but they're still confident by 2027. Melbourne's population will surpass Sydney's population of 5.7 million, which means there's a massive amount of opportunity in Melbourne at the moment to capitalise on an investment that is equally close to the city as, let's say, a Point Piper property in Sydney, and you're going to be paying a fraction of the price. So there's a massive opportunity there for people looking to still capitalise on something, whilst you could say it's still affordable, it's still close and accessible to the city, and all the amenity that you need is on your doorstep, and you're paying a fraction of the price as to what you'd be buying in Sydney. So that's just another point that I wanted to very quickly point out. Now, we'll just run through this article very quickly. And this was posted by Westpac. It was talking about the CoreLogic Melbourne update that they released at the beginning or the end of January, So CoreLogic's national measure of housing values rose 1.1% in January, up 10 basis points from the December results, when the index was up 1%, but well down from its peak of 2.8 in March. 5 of the 8 capital cities recorded a modest upstick in monthly rate of growth, including Melbourne, which had posted a slight decline in values over December. Despite this, the quarterly change continues to soften, reflecting a long-term trend of slowing growth across most regions in Australia, as we briefly outlined at the beginning of this presentation. But I think we're going to see a very similar trend in the sense that this growth is going to slow down now, but we're going to see some modest levels of growth across these capital cities in Australia. It's not the end of the growth, and I think we're just going to see, you could say, a moderation in that level of growth now, but it's still not a bad sign. It's still a very positive sign that these markets are moving in the right direction. We haven't seen some serious drop-offs of 10-15% in the month, or even 3 monthly figures. So I think there's still some very positive signs ahead. I think that a big part to play with Melbourne's growth in the next few months, or really the next 3 to 6 months, is going to be off the back of that migration. Now that we're seeing these borders reopening, restrictions are lifted, and we can essentially get back to normal again. So that's going to have a massive part to play with the population growth and the growth of property values in Melbourne, more so than other regions in Australia. Now, lastly, I just wanted to quickly run over some of the latest auction clearance rate figures, and it has been a very positive year in terms of auction clearance rates across Australia. We're seeing some record numbers come through once again. Melbourne, as you can see here, when we're comparing it to this week, which is the darker colour, and then last week, which is the lighter colour, Melbourne this week had a clearance rate of 74.2%. Compare that to last year, 77.4%. The difference being that this year Melbourne had 1,328 auctions take place, whereas last year it sat closer to that 1,000 mark. So there's a substantial amount more properties that are being taken to auction, and sellers looking to capitalize on an extremely hot market. Now, I'll just run over some of the more specific figures very quickly. So this week, Melbourne hosted 45.8% of auctions this week across the country. Melbourne had the busiest auction market for the second consecutive week in a row. 1,328 auctions were held across the country, which is an increase in volume of 27.8% week on week. Of the 1,141 results collected so far, 74.2% were successful, making Melbourne the only capital to record a rise in its preliminary clearance rate. Last week, Melbourne recorded a preliminary clearance rate of 70.3%, which was later revised to 69.7% at final figures, compared to this time last year when 77.4% of 1,095 auctions were held successful. This week's auction activity was up 21.3%. So all in all, some very positive signs. It is tracking in a positive direction. We're continuing to see an increase in that clearance rate, which is a positive sign. It shows that the market is still moving. So I think all in all, Melbourne still presents a fantastic opportunity. I know it hasn't seen the same levels of growth that a lot of other regions have seen across Australia. It was hit quite hard in comparison to your Sydneys and Brisbanes and Adelaides and Perths as well. But I think that there's going to be definitely some benefits to getting into that market this year, and we can capitalize on that overseas migration, the demand for people wanting to be in Melbourne. I think the rental market's going to benefit significantly in Melbourne as well over the next 12 months. So I hope you've enjoyed today's video. If you've got any questions, please feel free to reach out to the team. We're all more than happy to have a chat with you. And I look forward to hearing from you all very soon. Have a fantastic weekend, and we'll speak soon. Thank you.